If you're a small business owner employing a spouse or your children, you might be saving yourself a lot of money. And if you're not, you're costing yourself a lot of money. You can save a lot of money by employing your spouse, maybe even your children. And we're talking some real money. Hey there, Kenner French with Vast Solutions Group. We do tax, finance, and artificial intelligence for entrepreneurs. We've saved hundreds of people, maybe even thousands of people, thousands of dollars, if not tens of thousands of dollars, if not hundred thousands of dollars over the years we've been in business. Let's get right to it. What I was talking about earlier, this applies to whether you're running a business as a corporation, a partnership, a sole proprietorship, whatever the case is. Putting a family member on the payroll makes that person's income and the proportional cost of his or her employee benefits deductible business expenses. Now, as a result, the gross income of your business is lowered, thereby lowering your family's aggregated taxable income. I'm talking to you, entrepreneurs. Let's say, for example, your wife, let's say she's taking home a take-home pay from ABC Corporation, wherever the corporation is. Let's just say it's $100,000. That amount is included in your family's income, likely potentially pushing you into a higher tax bracket. Now, but if Janet works for you as, say, a sales manager, earning that same amount, her taxable income will provide to you, Mr. Business owner in this case, a deductible business expense, ultimately lowering your family's overall tax liability. Now, here's really good news. Now, let's just suppose that you and Janet have a teenage daughter. Let's call her Sharon, who has, let's say, pretty good computer skills. If you pay directly Sharon the going rate for whatever maintaining a database would be and keeping a record of her hours and the work performed, her salary is, again, deductible as a business expense. As long as her wages are less than, well, depending on the going scale of that year, as defined by the IRS, deductible, or a non-taxable event, I should say. Income above that amount, again, as described by the IRS, will be taxed at Sharon's presumably lower tax rate. Putting Sharon on your payroll, however, means you cannot claim her as a dependent, by the way. So you have to look at the specifics. Now, imagine that daughter Sharon is still an infant. If Janet, your spouse, works in your business, the cost of paying for childcare, therefore, will be lessened through the allowable child care tax credit for such expenses. Now, let's say it's 20 years in the future. Having Janet on the payroll could help out with the retirement planning, as an example. Subject to terms of the plan that you've put together and your business not maintaining a defined contribution plan, or in this case, you're putting together a defined benefit plan, that would qualify under what's called the Employee Retirement Income Security Act of 1974, or ERISA. That would allow Janet to receive an annual minimum distribution of at least $10,000 a year. Now, that's regardless of whether her annual salary ever got that high, as a matter of fact, believe it or not. That's just the rules. That's the IRS and Department of Labor rules. Now, most importantly, during her 20 years of service, your business would be able to have deducted contributions to the plan on behalf of her gross income. Okay. Now, let me explain. I guess I should back up a little bit. Let me explain a little bit about what is a defined benefit plan. They're plans where a business owner can put away a large amount of money, quite similar to a 401k in that the employee is putting away money. But in this case, the company puts away money for the employees, that being a huge amount of money. And what does that mean? Huge deductions. And what does that mean? A lot of tax savings, humongous tax savings. Sometimes there are circumstances where people can put away as much as even $200,000 or more. And we've got a case where someone's putting in $400,000. Actually, we have one case where he was putting in $1 million. He's only been employed for a short amount of time. Anyway, that could potentially mean, in this case, if someone's putting in $200,000, let's just say $60,000 in tax savings potentially. Plus, there are no employees in some cases, and maybe even in your case. The money goes all into the kitty, if you will, for the small business owner. Yes, all of the $200,000 goes in that kitty for the business owner. Now, alternatively, let's say a business offers a 401k plan. It's a type of a defined contribution plan, or DC plan. Then the contributions made by your business to Janet's account, your wife in this case, up to a certain amount also qualify as a tax-deductible business expense. All right, let's talk about now IRAs, how these could work. If your business does not offer, for whatever reason, a qualified retirement plan, or family members like Janet or Sharon do not want to participate in such a plan for whatever reason, the IRA, or individual retirement account, which is typically available only to employed individuals or their spouses, is an option. IRA contributions may be tax deductible for the employee but not for the business, and allow for tax deferral on earnings until withdrawals. Now, depending on the year, that would determine how much you would be able to put away. There are also these things called savings incentive match plans for employees, or SIMPLES, that allow for tax deductible salary deferral contributions up to certain amounts defined by the IRS. Now, contributions that are matched by the employer are deductible as a business expense, another tax savings. Simplified employee pensions, or SEP IRAs, also allow employer contributions up to 25% of the employee's compensation. Depending on the year, that would allow certain amounts, sometimes typically around $270,000, depending on the circumstances. In addition, you and or your employees may make regular IRA contributions to that same account. Now, as employees, Janet and Sharon are eligible for other employee benefits your company provides, such as accident and health insurance, group term life, and tuition assistance, depending on the circumstances. Now, the cost of these benefits, assuming they're reasonable, also are, you guessed it, deductible business expenses. Now, you need to keep in mind that employing family members means they really must work in the business for compensation that's reasonable for that type of work they're performing. You can't give them some crazy high number or some crazy low number. You have to look in the market. It's pretty easy to find that out on the web. Also, you got to be aware of the tax status of any retirement account or plan vehicle, because it's strictly governed by regulations that can cover both employer and the employee. Now, nonetheless, really, if you think about it, putting family members on the payroll often clear financial and tax benefits. They're very clear. Remember, always consult with a tax professional or financial professional to make sure that it makes sense in your specific circumstance, because sometimes it does, sometimes it doesn't. Each circumstance is very unique, and there's no cookie cutter approach. And if you have any questions, you can give us a call, or you need any disclosures or caveats to this, call us at 888-808-8278, or check us on the web, www.vastsolutionsgroup.com. Speaking of that, if you're listening to this, we appreciate it, especially if you've gotten it this far. Go ahead and email us at einstein@vastsolutionsgroup.com. Again, Einstein, which is EINSTEIN, at vastsolutionsgroup.com. We'll give you a free copy of my book. It's called The Entrepreneur's Manifesto, a collection of smart financial advice. As well, we'll give you a $50 gift certificate to Starbucks. You're one of the first 10 people who sends an email to Einstein at Vast Solutions Group. Again, you're going to get a book, and it's a very good book that dispels a lot of myths out there for entrepreneurs, and also the gift certificate for $50. Once again, Ken and French, thanks so much for listening. I really hope you found this of value, and if you have, go ahead, pass it on to a friend, give us a call, check us out on the web. We appreciate you spending the time learning about these subjects.